Okay, let's take that global perspective in then. Joining us right now, Rahul Chadha from Mirae Asset Global Investments on the show all the way from Hong Kong. Rahul, hi, good morning. Great to have you analyzing post-budget. Just wanted to understand, Rahul, while the significance of a budget day, of course, has been weaning off over the years, but has the budget done enough to not derail sentiment at a time when India, and as it is, is in a fragile mode, given that the global market weakness has surely swamped us as well?
So I think you said it rightly. Over the years, the relevance, the importance of budget has reduced. What people were looking at the budget was that there are kind of any significant negatives to derail the story, to derail the sentiment. So no clear negatives out of that. I think what stands out for us in the budget is this realistic assumptions. Look, everybody knows there are 5 state elections, and there is inflation, which is kind of a looming glass. So we may see some bit of an excise duty cuts ahead of these elections, etc. So that's where the assumptions for tax collections are very reasonable. The focus on infrastructure spends and rather than do shortcuts in terms of consumption handouts is positive from a longer term investors. So this kind of reiterates the story that look, governments wants to promote growth and development the right way, which is build up on the investment cycle, which creates jobs and that leads to higher incomes and higher consumption.
Yeah, absolutely. Critics were analyzing, Rahul, the inflationary impact of the budget. While many believe that the RBI is not going to do anything out of the ordinary, that they're going to very much be in sync with the government, which has pretty much been their stance so far, and they're not going to be supremely hawkish. That said, at a time like this, do you believe that the markets will somewhere digest the Fed price action and even the RBI at some point in time will have to bite the bullet sooner than later?
So some bit of a normalization of monetary policy is expected. But look, real rates are sufficiently kind of a negative. We have sufficient incentives from government in terms of the PLI schemes, which are 5 to 10% of sales. The tax rates for fresh manufacturing or new manufacturing in India at 15% for next couple of years is very attractive. And it's a large domestic market. Businesses or companies are looking to divest away from China as a manufacturing base. So all these things come nicely for India to ramp up on manufacturing. So some bit of a rate hikes, I think, would be taken in by the stride, let's say, for businesses who are looking to invest or from a market perspective.
Good morning, Rahul. We've seen such a higher spend on Capex, like you were pointing out. Now, of course, let's see all eyes on 9th of February and what the RBI governor announces as the outcome of the Monetary Policy Committee. But from the market's perspective, from the flows perspective, any impact from the higher borrowing program that has been projected in the budget as well? It is a big increase.
So I think markets would watch that closely, and we saw that in 10-year yesterday, the spike happened. Hopefully, kind of when people look in the details of the budget and realize, look, assumptions are fairly conservative, so there is no need for outright panic. But look, if the bond yields kind of spike up significant from here, that would be negative. But we've seen time and again, it is difficult for government to spend so much money. And a lot of these spends, even for this year, are towards the fourth quarter. So the hope here is those assumptions of 6.5% fiscal deficits are conservative, and government kind of achieves much better than that.
In fact, the budget is also projecting, inflation at 5% for the year. The expectation being that we will see commodity prices also come down. So wait and watch mode. Thanks a lot, Rahul, for being live with us today on The Market.